What's up, guys? William Ryan back with another video, and we're just going to be going over what's occurred since the last video that I've posted. Okay, so in the last video that I did, or that I posted to this YouTube channel, we talked about the previous week's weekly bias. Okay, and we talked about how dollar was going to be moving higher and euro was going to be moving lower. Okay, right? So you guys seen on the YouTube channel that I have that swing trade still in play. And when we hop over to euro, you guys will see how that's going over there. So moving right along, okay, so we have, you guys seen this exact same chart, right? So price closed above this balanced price range. We came back into it, order block, we rallied. Okay, came back down, filled in this little fair value gap, rallied, and now I believe our next stop is going to be this high here at we'll say 108 big figure. Okay, so I think this is the draw on liquidity. I think this is where we're actually headed this week. I think it's time for price to open up very similar to this. Okay, so these candles in here. And so that is what I'm expecting for the remainder of this week. Okay, I'm just going to show you guys what could possibly get utilized going forward. So I potentially see, right, if price, right, because when price takes out a high like this, 70% of the time, price will want to come back into the range, right, to accumulate more orders at fair value and then expand out of the range. So I'm thinking this area right here could be an area of interest, right? So think about it like a daily, a daily market profile, right? So think about it like this. If you had, okay, the weekly candle as a daily profile. So this would be London delayed protraction, right? So say this here was the start of the day, although we know this is on an hourly chart. This is for the weekly chart. So price consolidates, drives down, expands up. Okay, and then now we're looking for a retracement. So London delayed protraction, I think, is in effect potentially for the weekly candle. If price wants to come back down into this fair value gap here in this balanced price range. Okay, I think this is a good area to look at potential longs. And on a lower time frame, I'll be looking for market maker buy models to unfold in this area to continue higher for the draw on liquidity up here. As you guys can see, it's not that far away. Okay, it's really not that far away. Maybe around 100 pips from where we're at right now. Yep, 130 pips or so. So we're really not that far away. And I think this week we will eventually get we'll get up to this buy side liquidity pool resting at 108. Okay, moving right along. Okay, on the daily chart, here's the swing trade that we have been in. Okay, and I'm expecting these equal lows to get taken out tomorrow. And potentially a really, really big bearish day. Okay, I don't want to see price come down here and just wick through and then close back above these highs. I want to see speed and magnitude. Okay, I'm expecting a really, really big candle this week and maybe even into next week, and to be quite honest, for the remainder of this month, because we have this massive buy side imbalance, sell side inefficiency, and I'm looking for price to come down into this price level here where the balanced price range is. You guys can see we have an order block, fair value gap. So this is an area that I'm looking for price on euro to draw into. If we want to get animated through the downside, okay, this is where we're headed, I think. And you guys can see that the middle of this fair value gap, okay, is within this balanced price range and this order block's wick. So I'm expecting price, okay, to come down to 101 200. Okay, I think that's a great place for price to draw into for the upcoming weeks and potentially this month. And so, yeah, the swing trade that we have currently on euro is going very, very well. It's going to script. We got the big candles that we were looking for. And we're going to continue to look for bearishness on these currencies. Gold last week and even today, wow, it's moved almost 1,000 pips. 1,000 pips just through the past week, guys. Right, we were looking for bearish prices. We were looking for this balanced price range here to respect price and for price to hold this balanced price range. And I said, if we get below here, we'd want to see price come back up into that area to then go short. We did not get that setup. Price just melted and targeted the sell side. For gold, I think that the next draw on liquidity is this low over here, right? I mentioned that in the previous video, right? Weekly commentary. And we've actually closed. Actually, no, we haven't. Okay, see this balanced price range here in this order block? So I want to see price close below here. And I think we can... Gold has a long way to go, guys. Right, if we're expecting dollar to go to 115, well, I'm expecting dollar to go to 115 at some point. These equal lows in here are way too clean. And just looking at how fast we're moving, 1,000 pips in 1, 2, 3, 4, 5, 6 days is pretty crazy. Okay, so the delivery that we were expecting on gold has panned out, just like euro and dollar. Moving right along to the S&P 500. Okay, so we wanted price to draw into this fair value gap and the sell side liquidity pool here. We got that last week. Okay, and I'm expecting continuation lower for these equal lows in this balanced price range, and ultimately the lows down here. Okay, again, I think the interest rates are going to be going up to 15%. 12 to 15%. And I'll make a video on that actually today as well, explaining what I see in the charts and what I believe is to come. Right, so I'm expecting bearishness. I'm very, very bearish on all the markets. Okay, and we got the delivery we looked for last week. And again, we are looking for continuation lower. If and when price trades below this fair value gap, we can look for price to trade back up to it. Okay, and then start forming market maker sell model signatures on a lower time frame. Okay, same thing on NASDAQ. I believe, right, so we have SMT currently. Okay, I know I said I'm not going to talk about that a whole lot on this YouTube channel. You guys can go look at it on ICT's YouTube channel. He has tons of content about it. And I'm sure there's tons of content on that topic on YouTube. Right, but so this area in here, so you can see that we've taken out this day's high. Okay, on the S&P 500, we are failing to take out that high. So this in here, right, could have offered us a potential short-term trade or swing trade for the sell side liquidity resting below these equal lows, right? But you guys know the saying, well, actually you may not know the saying. So the first will be last. So NASDAQ is the first. It purged out this high, and S&P was the last. Well, actually failed to take out this high. So S&P is going to be first, right? So because S&P 500 has failed to take out this high, it's showing and indicating relatively like a weaker market than the NASDAQ, right? Because NASDAQ took out this daily high and went up into this fair value gap, right? So NASDAQ is showing more strength in comparison to the S&P 500. Moving right along, okay, we have hit our objective on the Dow Jones, right? So we were expecting lower prices, drawing into the sell side liquidity here and the fair value gap, and we ended up getting that. Okay, we left this gap open, which I mentioned that we would like to see. It did not fill in that gap. So very, very nice delivery on the Dow Jones. And so similarly to the S&P 500, if price trades below and closes below this fair value gap, this will become a balanced price range, and we can look for price to rally back up into this area and then look for market maker sell model signatures on a lower time frame. All right, guys, and that's going to be it for this video. Okay, so keeping it simple, we're looking for bulls on dollar, and we're looking for bears on indices, forex, gold, and other commodities. Okay, that's going to be it for this video, guys. I hope you guys have a blessed day. I got to hook up these live streams, and we're going to kick that off very, very soon.